Hi, I'm Stewart Heath, CEO of Harvard Grace. Today I want to talk about what's down with cap rates. And what I mean by that is why are the cap rates going down? If you're an avid real estate investor, as I am, and following the market, you've noticed, as I have over the last 12 months, the compression of cap rates, meaning that the cap rates are lower. What's up with that? How low do we think we're going to go? I've attached some great articles that you can read as well as listen to my post. But first, what is a cap rate, real quick? A cap rate is short for capitalization rate, and you calculate it by dividing the net operating income by the price of the property that you're looking at. And that will yield you a decimal or a percentage, which is essentially the in the rate of investment that you expect to achieve based on that price with the current net operating income. It's what you think of it like the interest rate. That's the investment income amount that you expect to achieve over time. Of course, there's a lot of different ways to influence that, but what we've seen is cap rates really since 2010 come down from 8, 9, 10 down into the sixes and sevens beginning about 5 years ago. And now in the last 12 months, there are some really high-end multifamily properties with really strong income that are trading at cap rates in the threes. What's driving this, and what does that mean? Well, a lower cap rate generally is interpreted as lower risk, and it's much more like an investment quality type bond, if you would, if you're down in the threes and you just expect that investment to perform without any hiccups and that the risk is fairly low. Alternatively, a higher cap rate is something that's perceived to have higher risk. The price will be lower, and in commensurate with the enhanced risk, you expect to make more off of that investment. So that's what cap rates mean. But the other factor that's impacting this is the financing cost, i.e., cap rates are inextricably tied to interest rates. And as interest rates continue to live on the bottom, it wasn't just 10 days or so ago that the 10-year bond was down at 1.1. Today, I think it's popped up back to 1.5. Since September, it's caused the stock market to really be volatile. But even though interest rates are not a component in the calculation, interest rates are absolutely a factor influencing the cap rate. So I would expect that as long as interest rates are on the floor like they are now, you should expect cap rates to stay low and even perhaps get lower. Cap rates also reflect the credit quality of the tenant. As you will see in various office buildings, like suburban office, always will have a slightly higher cap rate than a central business district office building in the same market. So there's all kinds of other factors on that. If we can discuss this with you, we would love to talk with you anytime. You can reach out and grab my link and book some time with me on Calendly. Otherwise, I'll look for you online. Thanks for watching. Bye.